Good morning, everybody. Happy Thursday. Am I early? I am. You guys don't know. Most of you guys watch it replay anyway, so you don't know when I'm really early until I tell you. It's funny because I just logged on early because I was like, I'm ready, but then I forgot to actually pull my live up. There we go, my outline. So welcome. I will give everyone just another, like a minute to get on in case they do want to catch us live. I'll banter for like a minute and then I'll get going. I had someone this morning tell me I look tired. Guys, I am. Like, tax season ended less than 10 days ago. And tax season is a monster. Like, it is a beast. So I am still tired. And, I've been doing this for many, many a tax seasons. I've been my own firm, owned my own firm. We just finished up the 8th tax season. And we make improvements. We put in processes every year that make certain things easier, make things go smoother. But there are always kinks. There are always things that just, you can't plan out for everything. And even if you did, I think even the smoothest tax season is still going to be bananas because you are trying to help all or most of your clients in a 2.5-month time span. Like it's bananas. Anyway, okay, it is 10 o'clock. Hi, welcome. If you are new here and wondering who is complaining about being an accountant, it is me. I am Bree Beers. I own Bree Beers and Associates. We are a tax and accounting firm located in Denver, Colorado, but we work with clients across the country. We specialize in tax and specifically tax advisory and tax strategy. So we really want to help small business owners and taxpayers figure out how to save money on taxes. It's what it comes down to. And that's probably why you're here. So today, if you are new here, spiel, yes, I'm Bree Beers. I am a CPA, a certified tax coach, an advanced tax strategist, a fractional CFO. I have over 20 years of accounting, tons of tax seasons. I have 14 on my outline, but I don't know, maybe 15, maybe more. I don't know. But I am 8 years as a business owner. And of that 8 years, most of that time has been spent really learning the tax code and figuring out how, we hear about the rich and the wealthy using it to save money on taxes. How do they pay 0% tax? How do they do that? And figure out how I can implement some of those strategies and utilize them for everyday normal business owners like you and me. So for today, we are in part 2 of our intro to tax planning series. Guys, you can tell I do not plan this very well. I just kind of come up with a topic and spiel it out there. But last week we talked about why. Part 1 was about why now is the time to think about tax planning. All right. And really what we talked about was the sooner you start, the better, right? The sooner you start, the more time you have to implement the strategies, the more time you have to take advantage of it, the more tax you'll save. It's kind of the gist of last week, but you're welcome to go back and watch it. Whether you're watching on YouTube or Facebook, it's there. Today, we are talking about setting the foundation for tax planning. All right. I create these outlines and then I don't follow them and then I lose where I'm at. Okay. So there we go. So today, talking about setting the stage, like setting the foundations, okay? And we're going to specifically talk about 3 must-haves that you got to have in place for tax planning to really begin and to be advantageous. And then I thought about a 4th one while I was getting ready this morning. So bonus tip, which was kind of a duh for me, but we'll get there. So today, like I said, it's about setting the stage and it's thinking about, we get excited about saving on taxes. And I come out here and I talk about tax planning, tax strategy, tax advisory, and people are like, yeah, this is great. And then I meet with people and sometimes we find that we're not quite there as a business owner. There's a few critical pieces that are missing that need to be put in place. So I'm hoping that by coming on here and on these, free trainings and kind of helping you set those foundations, you can put those pieces in place or figure out what your next steps are so that when we are able to work together, you are ready and raring to go. All right. So the first thing, we're going to just jump in. There's 3 things, bonus 4th. So the first thing, guys, is you have to have some sort of business or investment activity. Okay. And we get a lot of W-2 employees who come in and I want to save money on taxes. And we look and their only source of income, their only activity is their W-2 income. And when you only have W-2 income, or maybe, Social Security or investment, when you don't have a business or you don't have a real estate portfolio, you have very limited tax tools. There are things out there available to you: retirement accounts, HSA savings, maybe some home deductions if you're itemizing on Schedule A, but you are very limited in what you can do from, I don't know why. You're very limited on what you can do from a tax planning perspective. And by having a business or a real estate portfolio, right? When we say real estate portfolio, we mean 2 or more rental properties. They can be short-term, they can be long-term, but you then have this business activity. We call it a tax savings vehicle. All right. And now you have some wiggle room to take advantage of the tax code. All right. Because while the tax code, right, a lot of times we think that the tax code is reserved for the rich and wealthy, and there are parts in there that are. But overall, it is built for business owners, small business owners. All right. The code is built for us. It really is. But as business owners, we're not also accountants. We're not there to rip apart the tax code and figure out what applies to us, what doesn't. And that's why the rich and the wealthy take the most advantage of the tax code, because they have that, right? They have the resources, they have the team. All right. But there are parts of it in there that are for all of us. All right. And so that's what we're really here to try to figure out. But it's for when I say all of us, I mean small business owners or real estate investors. All right. Which all of us can be. All right. If you are here and you're like, I am not a business owner, I do not want to own real estate, then we'll talk about this is your first step. All right. But let's start with what counts, right? Because a lot of people, when we say the word small business owner, they think that has to be their main activity, their main source of income, all they do, right? I mean, that's what I do, right? I don't have a W-2 job. I strictly work in my business. I run my business, and people think that's all that counts. It's not. All right. We talk a lot about, if this is not your first time here, we talk a lot about the fact that you can have a side hustle, right? You can be a W-2 employee and have some sort of side gig, contractor gig, something where you're making this second income, right? That is your business. That it does not have to be your full-time gig. All right. So we talk about sole proprietors. We talk about contractors. That's a big one. A lot of us, we have our W-2 job and then we contract work out, right? Maybe we're doing handyman stuff around the house. Maybe we're door dashing. Maybe we're Ubering. Those counts. Maybe we are teaching on the side, right? Maybe, we're teaching people how to do what we do. I have teachers who on the side teach teachers. Okay, maybe we've taken a hobby and we've made it into a business. We bake cakes, we make shirts, whatever that is. Maybe we're accountants and we're doing taxes on the side, or we're doing bookkeeping on the side. All right. It can be a contractor or side hustle work. It still counts. When we say business owners, you are still included. All right. So sole proprietors, it can be your full-time job. The more, obviously the more income you have, the more we can open up doors, but anything, even as small as just, multi-level marketing, that's the one I forgot, also counts. All right. And then when we talk about a real estate portfolio, all right, we have 2 or more, right? Can't really get away with 1. 2 is a stretch. We have to, cross some T's, dot some I's, have some conversations to see if we can make 2 count, but usually we can, as long as we're working on that 3rd. All right. And they can be short-term or long-term rentals. All right. It doesn't have to be all, I don't have to have all long-term rentals out there. It can be short-term, long-term. It can be a combination of the 2. All right. So here's your first actionable tip. If you do not have what we call a tax strategy vehicle, right? If you do not have a business, a side hustle, a rental real estate portfolio, that's the first thing you've got to do. You've got to figure out what is it you want to do to open up that door. All right. That's a conversation to have with yourself, with anyone important in your life, a significant other, parents, wherever you're at. But remember, I'm not telling you to quit your W-2 job and start a business. I'm telling you to build something. And there are so many of us out there now, right, that can't afford to live on one W-2 job. So we already have a side hustle going on, right? We're already door dashing. We're already Ubering or driving for Lyft. We've already turned our hobby into a side business. We are already helping people. All right. So that is our taxi or our vehicle. All right. My second thing is if you are, excuse me, hold on a second. Oh, if you are already doing some contracting or side work or anything like that, you got to be legit. All right. And I'm not saying you have to set up a business or like a corporation, but you cannot be, you cannot be getting paid under the table. All right. In order to be a legit business and take advantage of the tax code, you have to show income. All right. So you have to be reporting your income in order to take expenses against it. All right. Otherwise, it's illegal. And yeah. The other step is if you are a side worker, like if you are doing contract work and you're just doing it maybe under your social, I would look into setting up an LLC. All right. This is more of a legal thing than a tax thing, but especially if you are in an area where there might be like some possibility for being sued or, anything like that, always a suggestion. But again, not an attorney, but that would be your next step. So real quick, actionable items for this first section of you got to have a vehicle. If you don't have a vehicle, think about what you want to be that. Is it a real estate portfolio or is it a business? Is it a side hustle? If you already have the side hustle, all right, then you are good on this first section and we're going to move on. All right. So section 2, this is the big one. This is the one that a lot of people get hung up on, and it's you have to have a growth mindset. All right. In order to take advantage of because you guys, tax planning is not just about write-offs. Okay. It's about keeping more of what you earn as you grow. Okay. And we talk about, it's not necessarily about spending more, but it's about turning post-tax dollars into pre-tax dollars. All right. And it requires you to be open to change. All right. It's running expenses through your business or through your tax vehicle, right? It's possibly changing structure. If you're a sole proprietor, or if you're a single member LLC, maybe an S Corp is going to save you tax. Maybe not. It's about paying your kids. So many people have this stigma about paying their kids. And it is okay. All right. As long as they're doing stuff in your business, and it requires you to be open to implementing a plan. All right. So mindset matters. And this is a hard one because we do get stuck, living under societal norms, right? It's just, we're taught certain things and it's really hard to break those thought processes. So we've got to be able to do that. And a lot of that comes from learning, right? Becoming educated on these things. But a lot of mindset roadblocks that I get when I'm talking to people is I don't make enough money yet. Right? My business isn't that big. I'm not making anything. I can't worry about tax planning. Sometimes clients or taxpayers set an arbitrary number. They're like, once I hit 100,000, that's when I'll start thinking about tax planning. Or some other, the number really is arbitrary. Okay. They just pick a number. They're okay, once I get there, I will invest into this. Right. And then the other big one, you guys, and we talked about this in depth last week, is taxes are just something we deal with once a year. It's an end of the year thing and we just deal with it then. But again, we talked about this last week. When you're preparing your tax return, it's retroactive. There's very little, if anything, you can do at that point. It's reconciling. It's reconciling what got sent to the IRS versus what I actually owe. All right. Tax planning happens in the year. It happens in real time. All right. And so that's the biggest shift that I have a hard time getting people, because you don't want to talk about taxes in May. You want to be thinking about your summer vacation, but think about tax planning as a way to fund your summer vacation. All right. Whatever you need to do to shift that into, this is a ongoing process. Tax planning is not a once a year thing. It's not something I just do at year end. It's something that I'm working on year round. All right. So that shift in perspective, right? So every single 6 and 7 business owner out there, all right, in order to grow and this has nothing to do with taxes. This is all about your business, right? In order to grow, you have to have a plan. All right. And when you started your business, we don't all have plans. I didn't have a plan. You kind of wing it. But as you get settled in to your business or into your real estate investment, journey, you get stuck and you get frustrated when you don't have a plan. So you've got to get a plan in place so that you can grow. All right. And that comes to having that growth mindset. Okay. So number 3, and this is the tough one. This is another tough one, is your books have got to be in order. Okay. And if you have been here with me before, again, outside of even tax, just in the name of running a good business, is that in order to grow a business, to be successful, to not constantly be struggling and just always in pain as a business owner, you have to make data-driven decisions. All right. And this, you have to have that growth mindset we talked about, right, in order to do this. But so many of us, we make these decisions based on gut or based on what sounds good, right? But if we can have data, actual financial data in place to drive these decisions, we are going to grow faster. We're going to grow better. We're just going to be more strategic about it. All right. And so good data drives good strategy. All right. So whether we're talking tax planning or just business strategy in general, we've got to have good data. And this is a roadblock that a lot of people have a tough time with, because so many small business owners, they start out in this area where they want to do it themselves. And I'm not against anyone doing their own bookkeeping, right? Especially when you're first starting out, you don't have money to hire people. You're just getting started, I get it. I've been there, done that. But when you get to the point in your business where you're not doing your books because you're putting it off because you hate it and you just don't want to deal with it. That's me. Guys, I don't do my own books. All right. Lindsay, who works with me, does our books, because when I was in charge of them, I just didn't do them. And I couldn't make data-driven decisions because my books were never in place or were never done. All right. So I have someone else doing it. And that time comes when you get to the point where you are at capacity, when your time spent on doing your books, even if it's only a couple hours a week. All right. If those couple hours a week that you are doing your books can better be spent making money and generating revenue, it is time to hire someone to help you with that. Okay. If you get to the point where you are not keeping up with your books, right? Your books have to be in order, right? And when I say in order, monthly, guys, on a monthly basis, you should be reconciling your bank accounts and credit card accounts. You should be able to generate or create a P&L, a profit and loss statement, for the previous month at any time during the year. All right. That's important, again, for running your business, but also if you want to be in the elite where you're implementing tax strategies, we got to know what you're making. We got to know where you're spending. All right. So your books have to be in order. And so what that looks like, you guys, the first thing, and I got to start with, is you got to have a separate business bank account. And for many of you out there that are established business owners, you're like, yeah, Brie, got it. But those people starting out, think back to when you were starting. Some of us, we didn't know that. Right? We kind of just spent money as we went. We tried to track it with a spreadsheet, but separate bank account, separate credit card, if that's the way you're spending for the business. Your business expenses need to be completely separate from your personal, all right, for multiple reasons. But the first being, when you do not separate, you are going to miss expenses. All right, you are going to miss deductions, miss expenses. I promise you. Like, it does not matter how good you are, you're going to. All right. So you want to make sure you have that. And also, you guys, for those of you that do end up kind of working retrospectively, right? Maybe you're like, I'm planning on doing my own bookkeeping. And then December comes, you're like, I didn't do my own bookkeeping. All right. If you have a separate business bank account, that's easy. All your transactions are in one place. If you're commingling with your personal, then you got to go through all those statements and try to figure out, was this trip to was this trip to Target for business, or was this my personal? Right? Like, what a mess. What a waste of time as well. Okay. So the first thing, separate business banking and checking or credit card accounts. All right. Then you have to have something in place to track your finances. We use QuickBooks Online. You can use Xero, FreshBooks, anything like that. When you're super early starting out and your transactions are very limited, a spreadsheet works, right? When you only have a couple transactions at a time, spreadsheet's great, but you have to have something to track those expenses and income. All right. And a spreadsheet only gets you so far. All right. So when I think about your accounting, actually, I'm going to circle back around to the accounting journey at the end. Okay. But no, I'm going to just do it now. First thing, business bank accounts, separate, boom. The next thing is some sort of getting out of a spreadsheet and getting into something quick, like a software. Okay. And then eventually it's hiring a bookkeeper. All right. And then a tax professional. I'm not a bookkeeper, but I think if you are not keeping up with your books on a regular basis and doing it, and keeping up with it, then you got to get a bookkeeper in before you get a tax advisor. That's my 2 cents, if you care. Okay. So getting our front back to books being in order. Separate business bank account. We have something that we're tracking our expenses and income to where we can pull a P&L at any time. Receipts and records stored securely. All right. So this is one I haven't had to do a ton of audits, but I've done audit studies. I've looked at them. I've been in a handful of audits, and at no time have I been bank records, like bank and credit card records, have sufficed. However, that is not what the IRS says. The IRS guide says you have to have receipts. Okay, so I will always tell you to save receipts. When you use something like QuickBooks or FreshBooks, you can just take a picture, upload it, and connect it to the expense. But I'm also not going to be the one that tells you to stress out about going and finding a receipt you missed. Okay, do your best at keeping receipts. If you ever pay for anything out of cash or you pay for anything out of your personal account by accident, absolutely, 100%. Must have a receipt, must have that somewhere safe. All right. Receipts for stuff that you run through the business bank account, do your best. All right. Perfection is not necessary though. And again, accurate profit and loss reports available at any time. You want to see as a business owner, you want to see on a monthly basis, year to date, for a quarter, how much money came in? How much money did we spend? All right. And as you grow, you'll start to kind of look at that and even deeper, right? As you grow and maybe get multiple, sources of revenue, you'll want to know what products or services made how much, what cost stuff. That's great. For now, I just want to know how much money came in, how much did we spend, and where. Okay. So for those of you that are like, whoa, I'm not there yet. You had me at business bank account. I got that. I thought I was rocking it, but I don't have, I'm not using any sort of software. I don't have a bookkeeper. What do I do? All right. So once you have that business account and credit card, then spreadsheet is good for now. Like if that's what's preventing you from getting started is the overwhelm of like, is it QuickBooks? Is it FreshBooks? Start with a spreadsheet. All right. The great thing about a spreadsheet is you can export your bank info, your checking and credit card info to a spreadsheet and then categorize it. All right. But as soon as you can afford to, and I think, guys, QuickBooks, FreshBooks, Xero, depending on what I think they're anywhere from 20 to, I don't know how many dollars anymore. It gets more and more expensive, but it is a business expense that I 100% do it. All right. Even if you have a bookkeeper, if you're doing your own bookkeeping, all right, I suggest you're in there once a week. We do Money Mondays. Even though I have a bookkeeper, I still look at my money every Monday and kind of evaluate my cash flow. All right. And I really want you to go back to that growth mindset piece and stop thinking about bookkeeping as a chore. All right. Because it's daunting. Nobody likes bookkeeping unless you're a bookkeeper. Even then, I don't know if you love it, but stop thinking of it as a chore and think of it as a tool. All right. When your books are in order, when your books make sense, You have a tool to help your business grow and or survive. All right, if that's the season you're in. All right, but we cannot make decisions whether they're tax strategy based or just business based without knowing how much money we have in the business bank account, how much money is coming in, how much money are we, projected to make, what are we spending, where are we spending it. All right, you got to know these things. All right, so I encourage you to use that growth mindset that we're working on and think of your bookkeeping as a tool, not a chore. That's so hard. Easier said than done. I get it. All right, the bonus takeaway that I thought of while I was getting ready this morning, you guys, was to get up to date on your taxes. A lot of people get behind. Maybe if you haven't done 2024, you're fine. As long as you filed an extension, like you're good. Even if you didn't, don't panic. But if you're one of those people that's a couple years behind, that is a must. You've got to get caught up on your tax returns in order to know where we have a starting point, right, for this year. Okay, so that was like a bonus tip. All right, cool. So great on time. So key takeaways, you guys, key takeaways. So the 3 things you need to have before you jump into tax planning, you've got to have a tax strategy vehicle that is a real estate portfolio or a business, even a side hustle, right? It does not have to be our full-time job. I cannot reiterate that enough. Okay, so 1 is a tax strategy vehicle. 2 is that growth mindset. We've got to have that mindset that is geared toward growing our business, toward thinking outside the box, and really that proactive decision making. All right. And then the last one is we've got to be able to make data-driven decisions. So we've got to have some accurate financials, clean, current, accurate financials. All right. When I put it like that, it's not that hard, right? It seems pretty easy. No. If you are missing any of these steps, don't stress. All right. Figure out what your next step is. All right. You cannot, these are the foundations. You've got to have these in place. But you don't have, like, if you don't already have them in place, you can get them in place. All right. Get them in place with just a little help. All right. And so again, figure out where you are in terms of which of these steps you're on and figure out what your next step is. Okay. If you do not have that business or real estate portfolio, that is your first step. That's an easy, it's not an easy step, but it's an easy, you can see your next step. If you have that business vehicle in place, is your growth mindset there? Do you need to do some work on that? We're going to talk about some myths about tax planning and all that stuff next week. Get to that in a second. Are your financials in order? Okay, this is the one that can be overwhelming and cumbersome, but get help. If you're not doing it on your own and you have, if you are, or you're, whether you're not doing it on your own because you don't want to, or you just don't have time, figure out the system to where this can be done on a regular basis. Yes, it's going to cost you money. It's going to cost you, investing in software. It's going to cost you investing time to learn it if you're going to do your own bookkeeping or hire a bookkeeper to do it on your behalf. But it's a business expense. And more than a business expense, it's an investment. It's an investment in your business growth. Okay. It's a must. All right. So trying to think. We do not do bookkeeping, but I have amazing bookkeepers I work with. So if that is where you're stuck, feel free to reach out. We can put you in contact with some awesome bookkeepers. If you are good, if you're like, these foundations are great, I'm there at least, and you don't have to be perfect, but if you're like, yeah, I have these things in place and you're ready to do some tax planning, my calendar opens in May, you guys. It is open. The link is in the caption somewhere. So yeah, book a call with me. And what we do with it's the tax analysis. There's 2 links. One is if you need your 2024 tax return still done, that's a tax discovery call. We got you. But if you are ready to jump into tax strategy, okay, that's a tax analysis call, and that's cool. We there's a questionnaire, a couple questions to ask you. You and I chat, and then we do an analysis and figure out where your lowest hanging fruit is. Do you have 2 or 3 strategies that we can, implement or that can be implemented? And we show you how much money you can save by implementing these strategies. So that's free. If you decide to work with us after that, then we'll talk about investment and working with us. But that part is just to make sure we can even help you. All All right, so next week is part 3. So normally, you guys, the first Thursday of each month is Q&A, but because we're in the middle of this training series, I'm going to finish this training series out and move the Q&A to the following week. All right, so next week, May 1st. I got to think about that. Okay, anyway, next week we will do part 3 of this training. All right, and this is where it gets, I don't want to say fun, but this is where we're going to tackle all the myths, the mental blocks. So we're going to kind of really talk about that growth mindset. We're going to pop into that, and we're going to, tackle some of the myths that keep people from moving into tax planning or help make you drag your feet, right? You're too small, you're too late, you're too afraid of an audit. That's another big one. And we'll also talk about some of the common mistakes people make when they're trying to tax plan on their own and how to avoid them. All right, so we're going to do that, and then we'll do our May Q&A the following week. That said, okay, I'll just come back to that. So yeah, that's that. Thank you. I see a few of you that joined live across the platforms. Thank you. I appreciate you guys when you are able to jump in here live. But for those of you watching on replay, I thank you as well. I do not take, I appreciate you utilizing your time and giving your time to me to learn from me. So thank you. Lastly, if you guys have questions, whether it's questions for our Q&A session or you have topic ideas that you want me to do a session on, DM us in Facebook. All right, you can DM me or the business page. I think me. I don't know. I have a VA that handles all the social. So DM us over there. DM us your questions. DM us your topic ideas. So we can, because we want these to be relevant to what you guys want to learn about. So, all right. That said, I'm going to go get some rest because apparently I look tired. You guys enjoy your Thursday. Enjoy your weekend, and we will see you next week. Bye.